All right, this is exercise 4-2 from chapter 4 of Intermediate Accounting 1. I'm recording this video because this is going to be a similar test question that you will find on your exam, or just to kind of show you how to do single step and multi-step income statement. So I'm going to combine two different things because on the test, you're supposed to do a multi-step income statement and calculate earnings per share. And I had the students ask me in class about a multiple choice question that was in the test bank. So which was calculating earnings per share. So I'm going to do that also in this video because this will help you for the test. Okay. So I actually kind of cheated just a little bit here, and I went and grabbed the solution to both of these. You're not going to be doing a single step on the test, but it is still important for you to know what a single step income statement is. It's just all the revenues and all of the expenses. Okay. Your net income, notice, is going to be exactly the same, single step or multi step. Okay. That's not going to change. When you are doing this multi step income statement, be sure to put a title. And that title needs to make sure that it is dated for the year ended December 31st, 2027. Okay. For a period ending. It is like we were watching a movie from January 1st to December 31st. Everything in that income statement is from January 1st to December 31. It's a movie. Whereas the balance sheet is dated just one day in time. It's like a picture. Okay. So multi-step income statement, we're going to take and start with sales, subtract cost of goods sold to get gross profit. We don't have gross profit over there on that single step income statement. Okay. That's another number that gives us information to be able to use. And really, what does gross profit tell me? We're making money buying and selling stuff. That's what we're doing. How upsetting would this be if we're in the business to buy and sell stuff and we had a negative gross profit? Okay. That means you're selling everything in your store is being sold at a loss. Okay. Most of the time, that's going to be positive because they are going to charge enough. You might end up having negative, might have a net loss at the end of the financial statement, but most of the time, gross profit will be positive. Okay. Then you're going to have your operating expenses. You have your selling expense, general and administrative expense, and total expenses. Then you're going to take the gross profit and subtract the operating expenses. So now we get operating income. Okay. Then we're going to throw in our other income and expenses. Interest revenue, interest expense is always going to be down there. Gain on the sale of investments. That's not something we can duplicate again. So that's why it does not go up there in the operating income. Operating is what we're in the business of doing. Okay. So basically, what we're saying is this is what we're in the business of doing. We can repeat that. I don't know that we can repeat a gain on the sale of an investment. Okay. We may not. That's why they throw that down into the other category. Okay. Then you get the total other, and then you're going to combine that with your operating income to get this income before taxes. And then I don't know, did they give us the tax expense? They told us what the tax expense was. Sometimes they might make you calculate it. Okay. So income tax expense, and then you end up with net income. So we got the same net income. We didn't get any good information out of that single step uh, income statement. But here we got gross profit. That's a good number for us to look at. We have positive operating income. That's awesome. Then we're going to look at our total other income, and we're getting another number here, income before taxes. Okay. So you get a lot more information on the multi-step income statement than you do the single step. So that's why that is primarily used, especially in merchandising type businesses like your Walmart, Kroger, Target. Okay. So that is for that problem. And it did not have the earnings per share on it, which your test question will, but somebody asked me how to work this multiple choice question. I did a little bit of it in class and shared it, but I didn't really like officially make a video on it and really show you where all the numbers come from. I just did it really quick because we didn't have a lot of time in class. Okay. So they want us to calculate basic earnings per share here, which you're going to have to do with that income statement problem. Okay. What is the formula for earnings per share? You should know this. It's a very common one. It's one you'd have to memorize for the CPA exam. So you would start with net income. We are going to subtract any preferred dividends, and we're going to divide that by the weighted average common shares. Okay. Oops. All right. So we know what our net income is. They gave us that. Our net income is 4 million. And preferred dividends, we didn't need the common dividends. This number gave us, we don't need it. Okay. Preferred dividends get paid their dividends before common. So that's why we have to subtract out the preferred dividends, then to calculate the weighted average common shares. Okay. So timelines really help you in this area. So they tell us the number of shares outstanding at the beginning of the year. So what they're saying is January 1st, there is 5 million shares outstanding. Okay. Then they tell us on July the 1st, another 400,000 shares are issued. Okay, so let me erase that. So from January 1st to July 1st, there's only 5 million shares. Okay, from July 1st to December 31st, there is 5,400,000. Okay, you can count on your fingers. It's okay. January through July the 1st, really, they could have said 630 and it still would have been the same. Okay. But they said July 1st. That's only 6 months. That is January, February, March, April, May, and June. That's 6 months. So you're going to multiply this 5 million by the fraction 6 divided by 12 or 1/2. Then there is another 6 months. July, we're counting July down here because 5,400,000 was outstanding for the whole month of July. So July, August, September, October, November, December is also 6 months. So we're going to multiply those out by 1/2 or 6 divided by 12. You should get 2,500,000 for the first one. And then you should get 2,700,000 for the second one. If you add those together, you have weighted average common shares of 5,200,000. Okay. If we'd have just did 5,400,000, that's not how many shares were outstanding the whole year. Okay. We had a weighted average of 5.2 million. So we'll take that formula and you will end up with 3,900,000 divided by 5,200,000 shares. So we have dollars over shares, and you should get 0.75. That is the answer on that multiple choice question. Okay, so that's all you do for weighted average. They could have thrown in a couple of other dates. You would do it the exact same way. So they might, like say in March, they might issue another 100,000 shares. You would do it exactly the same, figure out how many fractions you have, multiply them out, and get a total for weighted average common shares. All right, and that's all for this video.